Every time triple witching comes around, I'm told either by one half of the community out there it's going to be a snoozer, the other half says there'll be fireworks. The complexion of this one is a lot different, particularly given the record run-up and particularly given the outsized importance of NVIDIA and some of the other big tech stocks.
Hi, Romaine. Well, yeah, today actually I think we have the chance for both because we got off to a little bit of a rollicking start. There was some, there's the AM expiration of futures and futures options and some cash index options. Those are off the board. Then we sort of have settled into the doldrums. But this afternoon around the close is when the excitement can really start because of the rebalancing in XLK, an $80 billion ETF, which is basically going to be forced to, by many estimates, buy $10 billion worth of NVIDIA and sell the same amount of Apple, give or take. That can get things very spicy in the last few minutes.
Well, that's what I'm curious about. I mean, we focus so much on the S&P overall, and even the NASDAQ for that extent, but should we be paying much more attention to the specific tech indexes or tech ETFs, if you will, because it seems like whatever people rotate in and out of, it's still somehow going to be related to big tech?
I've been saying various times, it's NVIDIA's market. We're all just trading in it right now. And, that to me is really why we're forced to watch tech. The S&P 500 is essentially a third or more of big cap tech. The NASDAQ 100, of course, is about roughly half that. And so that's what's driving the bus, including some of the statistics you gave at the top of the show. So we have no choice but to follow tech. And, it's what brought us to the dance. And we have to hope that with the narrowing leadership, it can continue to play the music because it's definitely getting a bit, scary out there in terms of the divergences that you've alluded to and that we've been seeing.
Steve, is it me, or does triple witching become a bigger factor today than it did, say, 2 years ago? I mean, we talk about it a lot more, but by the end of trading on the day that options expire, has it actually resulted in a material move?
Yes and no. I think when triple witching is combined with a major rebalance, it can be very interesting, and you have no choice but to pay attention to it. And today, as we just mentioned, is one of those days. There are other times when the market's sort of adapted to it. Remember, the part of the allure, let's say, of triple witching was options used to options used to expire once a month. Then they started, 2006 weeklies, and then 2016 thrice weeklies, and 2022 daily. So we've gotten less and less focus on the triple witching times, but because of the uniqueness of the futures markets, and some of the biggest turnarounds have come on triple witching days, and because of the uniqueness of the fact that S&P tends to rebalance on these days, that's where the fun comes in, or the volatility, or whatever, however you want to refer to it.
I like the first choice you made, the fun comes in. We'll certainly be watching for the fun in the next 40 to 50 minutes. Do you agree with this idea that the absence of short investors in the broader market, the broader U.S. stock market, that is setting new records every day, is a sign that the rally is vulnerable?
I do agree with that to some extent. And what's also very interesting to me, I didn't check the numbers today, but as of yesterday, we had, I believe, 6 straight days in a row of outflows in spiders to the tune of about 28 billion, which is, I think, about 5% of its float. So you've got shrinking short interest, and now on top of it, you've got actually some shrinking overall interest. So it actually means that the shorts are a shrinking percentage of a shrinking pie. I'm not even quite sure what that means. Probably nothing all that good, though.
Oh, wow. I mean, this gets us to a broader point here, Steve. We talk a lot about the narrowness of the rally, the need to broaden out. And I've had some people come on this program saying that maybe we don't actually need that. And they've sort of drawn historical parallels where we've had other narrow breadth rallies that didn't necessarily end in disaster. I'm curious as to why we should think that this time might be different.
Well, I don't think it is that different. I think typically these very narrow rallies do introduce a lot of risk. If everybody were to decide that they wanted to get out of these mega cap tech stocks, who's there to buy the dip if everybody's long? I wrote a piece yesterday where I called it stock market Jenga, where we're taking little bits each day out of the foundation of the market and laying it on top, creating an ever less stable but higher tower. Ultimately, that doesn't end properly. It ends in the end of that game. Actually, there are no winners. There's just a loser, the person who put the last brick on. Yeah. I don't want that to happen. But I think that analogy is relatively sound, where we keep taking money out of other parts of the market and laying it on top of big cap tech. We have to be very careful that if there's an exit, or if there's at least a rotation, it can be orderly.
Why don't you think we've seen maybe a little bit more hedging? I mean, I understand, look, everyone wants to join in the party, to get all the upside here, but the lack of shorts, or not just shorts, I should say, but just really the lack of protection, whether it's in the options market or direct shorting, it's just minuscule right now relative to how high this market has risen.
You know, during my 25 years as an options market maker, I used to, consider my job as being the guy who sold umbrellas. And it's not particularly popular to sell umbrellas during a drought. And that's basically what's going on with volatility. I think of volatility as a hedge. I like to think of VIX as much as anything else as a measure of the institutional demand for hedging protection. And quite frankly, we haven't had clouds on the horizon in so long. I think people have sort of put aside the need to think about hedging or to think about the protection that I think is important to consider at all times.